Hey everyone, this is Dan with Data Trend. Today is Friday, January 29th, 2016. It's about 2:30 p.m. or so here Mountain Time. The market closed a half hour ago. We had a pretty big update today. The Russell 2000 ended the day up at 1035. It was up 3.25% or so, 3.2%. You can see it right there. What we're looking at right now is a weekly chart of the Russell 2000, and we had a big turn in the market this week, and that entire turn really took place today. We came from down around 1,000 or so yesterday to end the week up here at 1035. And that turn and the close today on Friday took us right up to this rising trend line. And this trend line, if you recall, is the one that started way back in 2009. So we do see here the market coming into an area where we might find a little bit of resistance. We don't know if that's going to happen, but there's certainly the possibility here. The market has been pretty broken, and so it's going to take some time for this to digest itself and heal. You know, we have a declining 10-week moving average, a declining 40-week moving average, so the longer-term trend is still bearish, and it looks pretty bad. But we did have a big turn this week, and you can have huge rallies within the context of a greater downtrend. So it's just something to be aware of. We're seeing a lot of volatility in both directions, on the upside and the downside. And it's just something to keep an eye on and not get caught off guard. This level here that I've sort of drawn the line through just indicates some potential resistance, potential support. It kind of lines up with this rising trend line. It's sort of right here in the neighborhood of, let's call it 1040 or so, which is just a little bit ahead of where the market closed today. So if we drop down in time frames, now we're on the daily chart. What you can see here, these are the expiration break-evens for the position. We started the trade back here on, I think, let's call it 119-ish or so, something like that. These were the initial expiration break-evens. We rolled the position lower. Those took us to the darker blue shaded lines. Let's see if we can get the other one on the chart. It's down there somewhere. There it is. So that took us to the darker blue shaded lines, and then today we made an adjustment to the position, added the second butterfly in, and the way that the market closed, we're already right up to another adjustment point. The trade is actually, or the market closed outside the body of the butterfly today, and it's a lot of that had to do with the rally that we saw in the last hour or so of trading. And my policy is usually not to adjust in the last hour or so of the day. I mean, I know where the market is. I know the type of pain the position can take. It's not super significant, and so I'm willing to just kind of wait and see what happens on Monday morning. But we'll take a look at the position here in a minute, and that'll make a little more sense. So this is the 65-minute time frame, and again, we've been watching kind of this box, and we said that if we broke up and above this 1020-ish level or so, that'd be an invitation to come up here and test 1035, and that's essentially where we ended the day. So we came here from early in the day down around 1,000 up to 1035 today for that 3.2% move. So, I mean, this was the level we were kind of watching. We got up and above it. You know, the market kind of poked there. It hung around. It found that it could hold that level. It didn't reverse. Each one of these candles is 65 minutes, so it was up there for a few hours. And then finally, in the last hour or so of trading, we got that big push higher up to the 1035 level, which is kind of what we were expecting if we got above that 1020. So none of this is unexpected or unreasonable, but it is what we have. So let's go ahead and look at the position itself. So if you recall, we started this trade. We had the, let me see here, I think it was the 9. So we had the 980 center butterfly, so the 925, the 980, and then the 1035. So it's a 55-point wide butterfly centered at 980. And today what I did is I added butterfly centered at 1000. On the downside, the wings are spaced at 55 points, and the upper wing is only 50. So we have the 10,000, the upper wing's at 1050, and then the lower here is at 945. And what I did is we had an open profit in that 102 call because the market had traded up so much. So I went ahead and I rolled that call down to 97. And the reason I did that is the call was pretty close to at the money. The extrinsic value was high. I moved it to an in the money call. I picked up some delta, and since I used the broken wing butterfly, it kept my T+0 line relatively flat. So one of the things you can see here is the market closed today here at 1035.38. It looks like we're getting some, just a little bit of ticking around there for a minute, but not much. The delta is under control. We have a negative 575 delta. The gamma is negative 4. It's starting to creep up. I'm not super thrilled about that. But again, the last part of this move all took place in the last hour. So I didn't want to race out there and just throw on an adjustment. I wanted to be a little bit more deliberate about it. And really, the amount of trouble we're going to get into, we have an open loss of about $92 on the position right now, which is well within the guidelines. Even if we were to gap up another 10 points on Monday, this is showing an open loss of $150 or so, and that's still definitely something that can be overcome. The theta is at 1245, Vega's negative 33, and again, the negative 92 loss. So suppose we do hang out up here on Monday and move higher. One of the things we could do, let's see what we have down here. One of the things we could do would be to add the 1020 butterfly. And I'm looking again at adding a butterfly that's 50 points wide on the upside and then 55 on the downside. And that's just to keep the delta slightly flatter. And that stretches out our expiration break even considerably. So we're here at 1035 right now. That would take us up to somewhere in the neighborhood of 1046, 1047. Really, I probably wouldn't be worrying about adjusting if I did that up until the low 1050s or so. And to that, we would add a call. So we can see that we have a negative 957 rut delta if we add that butterfly. So we'd probably try to pick up, say, maybe 60 deltas or so just to flatten that line out to under negative 5. I'm just going to switch over to IWM here to get the prices to populate. So if I was to add this 100 IWM call, we'd end up with something like this. And let's switch back to rut for the delta reference. We'd end up with a negative 3 delta or something like that. Gamma's getting more negative because we have more butterflies. The negative loss there, it's including something else. But at any rate, that's certainly an adjustment we could make. If we wanted to be a little bit less aggressive in terms of size, something we could do. So I've unticked the 100 call. We could also sell out this lowest butterfly that we have, the 980 center butterfly. And if we were to do that, we get quite a big push, and the expiration break-even line moves way up here, and we're not going to be adjusting until we get up into the 1055s. The trade-off, obviously, is that we give up some of the downside protection that we have. And for that reason, I'm not sure that that's the adjustment I'd want to make. I'd probably go with adding the third butterfly first and then eventually taking off this lowest one if we continue up higher. But it's all somewhat personal preference. So right now, we're in a position that looks like this. And one of the reasons that I didn't choose to adjust it as we are approaching the end of the day here is that I know if we have a pullback in the market at all, and this position is going to be just fine, and it's going to very quickly come into the money. And this print that we've ended the day on here, this negative $92, is actually the worst print I've seen on the trade all day. For a good portion of the day, the trade was printing. At some points it was printing a profit. At some points it was printing down $40, $50. So, I mean, this is a very reasonable open loss to have floating on the position. And really, the fact that we're outside of the expiration break even matters less than what our T+0 line looks like. So I'm watching this T+0 line and I'm saying, okay, well, even if we open way up here, into the 1045, even 1050 or something like that, the position still, it's going to be something that we can salvage. We can do something with it. We can make an adjustment. And on the downside, I'm really comfortable. So if this is the type of move here that we saw today that ends up being a fake out and we gap down here the next morning at 1020 or lower, which I don't know if that will happen, but if we were to, we would be in a very healthy position and we would be completely fine. So at this point, there's not much to worry about. We have a little bit of an open loss. We're just going to keep watching the trade. If the market opens higher next week and seems to want to hold kind of above this 1030-ish level, then I'll be looking to make an adjustment on Monday. But for the time being here on Friday, it just didn't seem like the time to do it. I think I'll just wait. This is sort of the move that I was talking about that we saw in the last hour. Basically the market went vertical here. In the last, each one of these candles is 5 minutes, so 5, 10, 15, 20, I guess the last hour started here. So really we went from 1024 to 1035 in quite a hurry, and it all took place in the last hour. And we'll see what happens. The market moved today basically from down here at 1,000 up to this 1035 level. So if it moves down a little bit on Monday, that's great. If it doesn't, then we'll just move the position higher. There's not much to do. We're not trying to predict the market. We're just reacting. So that's all I have for today. I hope it helps. If you have any questions, feel free to send me an email, info@thetatrend.com.